I want to talk about a video by Sven Carlin entitled 2020 Stock Market Crash Prediction. Be prepared for imminent crash and recession. Now you can tell by the title, it's a rather sarcastic take on those who've been predicting a crash for the last 7 or 8 years. Okay, fair enough. I'll leave a link in the description below to the video so you can make up your own mind how sarcastic it is. I think it's pretty sarcastic. Now this is a little bit of a hindsight video. It's looking at events over the last 11 years and how everyone was right who invested in the stock market and how all the other people who were bears were wrong by staying out of the market. I think this is a little bit unfair because there were very good reasons why so many people were forecasting a crash over the last 7 or 8 years. And it's also rather disingenuous to say they were right to invest in the stock market without honestly giving the reasons why the stock market has risen as it has. And Sven's video doesn't mention the real reasons why the stock market has risen as it has. He does say, invest in solid companies and it doesn't matter if you're in a bull or bear market, you'll be okay in the long run. And I think it's not bad advice, but again, it's disingenuous to talk like this after 11 years of a bull market. Everyone's a genius in any market who have stayed in while it's risen, and it's so tempting to attribute your gains to genius. I did leave a comment below the video and I mentioned that the reason many people have been predicting a crash is because they didn't predict the Fed or the US government would carry out all this extraordinary, unprecedented monetary policy, which has completely sabotaged future generations of prosperity. I then talk about hindsight bias, which is the tendency of people to overestimate their ability to have predicted an outcome that could not possibly have been predicted. How could anyone but an insider predict that the Fed and the US government would be so interventionist as they have been in the last 10 years or so? In any normal economy, we would have gone through the cycle. We would have had a recession at any point in the last 10 years. Given that the US government has tripled its national debt since 2008, from 8 trillion to 23 trillion, debt has outpaced GDP for years. In other words, it's a debt-fueled expansion. Corporate debt is at an all-time high. Stock buybacks have helped the stock market to all-time highs. The Fed were raising rates in 2018, which tanked the market nearly 20%. Then they did a 180 and cut rates 3 times through 2019. And then finally, they've bailed out the repo market, which is leaking more and more money, and there seems to be no end in sight with that. None of these things were mentioned in Sven's video at all. It was purely as if the real economy was lifting up the US stock market by itself, which is patently false because the US stock market is already at an all-time high in ratio to GDP. It's at about 150%. The last time it got this high was just before the last GFC. So if the real economy was lifting up the stock market, you'd be looking at a ratio of 1 to 1, maybe a little bit higher, but it's completely decoupled from the real economy. If I can take anything from Sven Carlin's video, it's hubris, complacency, and exuberance. These are not good signs if you're looking to invest in a particular asset class. You don't want to see current investors in that market displaying those kinds of characteristics. So what do you guys think? You think everything's normal and we've got years and years ahead of a bull market? Or that, hey, it doesn't matter because it's only going to be a 20% pullback and then we're going to have another 10-year bull run? Given all the extraordinary monetary policy that's gone on, I don't think so. I don't think it's going to happen the way they want it to any more than it hasn't happened for Japan. They would have wanted a 20%, 30% pullback in the early 90s, and then they would have marched on to 50,000, 60,000, 70,000 on the Nikkei. That didn't happen. They're at about 23,800 right now. That's just over half what it was in the early 90s. I'll leave it there. Comment down below if you've got anything to say about this, and I'll see you in the next video.